I said, you know what, it's not perfect. It absolutely is not perfect, and you've heard me express some concerns about what this will mean for individuals, high-income earners, for example, in states like New York and California and New Jersey. However, it is going to mean a lot on the corporate side. It's going to mean more in the way of profits, which is going to mean more for the stock market, which is already, again, at a new high, now up nearly 300 points in today's session. Markets are skyrocketing. You've got the Dow past 24,000. It's incredible, 6,000 points since this president was elected. Joining me for more analysis, Vice President of Vision for Fund Distributors, Heather Zamuraga, and President and CEO of the American Council for Capital Formation, Mark Bloomfield. Heather, wow. I don't think we've ever had another president come into office and so quickly see such an increase, record increase in these markets.
This is truly amazing, Trish. I mean, this is the best, fourth best stock market performance after a president was elected in history, right behind Kennedy and Bush and Clinton. And the markets are very resilient right now. I know some of this is on the backs of tax reform passing this evening, but you have to look at GDP growth above 3.3% right now, as well as consumer confidence and jobs. Unemployment is at a 17-year low. That 11-year low, I'm sorry, that matters, Trish.
Yeah, the fundamentals, Mark, they are looking good. And I guess my question to you would be, Mark, if we don't get tax reform, and by the way, it's looking increasingly like it is going to happen. That's a big deal that Senator McCain said he would support this. Mark, if it doesn't happen, do we still see 24K on the Dow?
You better ask somebody who knows more about the markets. I mean, all I know is I'm a fan of yours, and I watched you interview those presidential candidates. You tell me. You know more about the markets. I can talk about what tax reform can do for the economy.
Well, I'll tell you what I think it can do for the markets. Heather, I think it can send things a whole lot higher. You know, we've had a lot of people on the show who have said the fundamentals, much to your point, Heather, the fundamentals are good now. They're strong enough that it, in many ways, supports some of these levels. So if you get tax reform, that's the cherry on top.
Yes, the fundamentals do matter. And if you look at some of the smaller cap companies, the Russell 2000, I think that's the leading gauge right now, pointing to whether or not tax reform will get passed very soon. I think that's a good proxy to look at, the small cap stocks.
Yeah. All right, let's talk about the policy for a second. Mark, I think you can speak to this a little bit. My concern is that state and local taxes will not be able to be deducted anymore. So in some states that have very high rates, those people will not be able to deduct it. And I question what kind of economic toll that's going to take on things. I get it. If you're going to tell me, you know, it's not fair that Texas or New Hampshire or Florida are subsidizing New York, I get it. I understand you. I hear you. I'm just concerned about the immediate lag effect. If you start taxing people that make the money and are paying the taxes more, what effect will that have on the economies in these big states?
Trish, this must be a setup. Did you see my op-ed in the Wall Street Journal last week where I said Republicans expected a capital gains tax cut and they're going to get a capital tax increase because of the elimination of SALT? But that is just one factor. We really ought to look at the bill overall. And if you look at the bill overall, I don't know if you know this, but I was Secretary of President Reagan's transition group of taxes. And I feel like then, I feel like today. I mean, it's the same sort of feeling, that same sort of fundamental change, as you've said in your other interviews. It's the corporate tax changes that are going to make a big difference. Deal. If you look at, you were talking about 20 to 22, we're at 35 now, which makes us the worst corporate tax rate in the OECD. If we go to 20, where we want to be, we would be in the upper best half. And if we go to 22, we'd be smack in the middle. So I think the corporate part is the growth part. I think expensing is an important part. And yes, you remember we're talking about Ronald Reagan. He said, gosh, if I can get 70% of what I want, I'll worry about the other 20-30 later, and that's how I feel about capital gains.
Someone mentioned that to me just yesterday, and I was thinking about it last night and thinking about it this morning because I've been troubled by parts of this bill. I think that they could have done, should have done more on the individual side, and as I joke, I'm a little bit greedy. I want it all. But as we get down to the final moments here, I think, Heather, it's a big deal what we're talking about on the corporate side. And I hate the idea that Canada is a more competitive country than us right now because they have a lower tax rate.
Yeah, that's
and
not
you know,
good.
and France, and you name it. It
Hey,
doesn't
wait a minute, my
seem
wife's
to me.
French, so let's not, but she agrees with you. But let's talk about the Greek socialists. They're more excited about reducing corporate taxes than we are.
Yeah, I mean, so in other words, we want to get back to who we are as a nation, Heather, right? And we were never about all this taxation. We were about growth and enterprise and creativity.
Yes.
And let's get back to that because we want to encourage that for the future.
It comes down to, do you want the government to have more power and control over the money you earn, or do you feel like you would be the most efficient and effective allocator of that money yourself? And Senator Lindsey Graham said that 22% is not that bad. It's like a cocktail. You can add a little bit of this or a little less of this in terms of moving it from 20 to 22%. But failure is not an option.
No,
so I think Republicans, despite their quarrels, will get on board and get this done today or tomorrow.
And they should remember the Reagan quote for sure, as Mark pointed out. Thank you. It's good to see you guys.
Thanks so much.
And Mark, thank you for your kind words. Appreciate it.